Well, welcome everyone to Abu Dhabi Finance Week. So we have the great privilege to have you with us today. So can you introduce yourself? What do you do? Where are you coming from? Where are you going?
Well, thank you for having me here. My name is GV Ravishankar. I'm a partner with Peak 15 Partners. Till about 4 months ago, we used to be called Sequoia Capital India in Southeast Asia. So we had a rebranding event in June. I'm coming in from Dubai, which is where I'm based out of. But I'm very frequently in India, including tonight. I'm flying back to India, so it's back and forth.
So when you are seeing the vibrant, vibrant scene we are currently building in Abu Dhabi, you should think of moving and be with us.
Well, never say never, right?
Perfect. So the theme of the panel is about, like investment and VC outlook in the changing world. So we are hearing a lot of things, about that. Is like people are calling it like the era of transition, changing world order. People are saying like there is a real downturn. Other one telling that it's just a correction of the market. What are your thoughts about that? So the last year, I would say we went through, and what are your perspective on the coming months or coming year?
Yeah, it's a great question. Look, we are definitely in a period of transition, and there is definitely a correction. So, somewhat both are true. When you look at what happened in 2020, 2021, the amount of capital that got raised, the zero interest rate environment, people are just kind of spending as though there is infinite money, and so a lot of bad habits crept in, in how companies were being built and so on. And a bunch of the blame is on investors who allowed and gave so much capital. There was a lot of fear of missing out, etc. That has really changed in the last 2 years because capital is now not as cheap anymore. So it's what's not cheap will be spent more carefully, right? And that's what we're seeing. And that is a healthy transition for sure, right? That's on one end, which is markets have corrected, fundraising is lower. People have gone from in 2021 raising 2 times a year to now going back to what is normal, which is once in 2 years for startups and so on, right? So I think that is a healthy transition. And like I keep saying, it's like you need a period of fasting for you to cleanse yourselves, and we are going through that fasting period, right? So you come out of this stronger. On the other hand, there is also a changing kind of world order with the geopolitics that we are seeing, which means in a way there are opportunities that are outside of what traditionally were in the US and in China, which used to be the two big hubs for technology. Now you're starting to see a lot more prevalence of Asian companies and a lot more interest in Asia, right? And Asia, Middle East, Southeast Asia, broadly. And that is a great opportunity for people in the region. And I mentioned this before, and quoting Warren Buffett, who said, look, if you're born in the US as a white male, you have a lottery that you won. And I think, if you were to be born in this decade, or be in your prime in this decade, you want to be in this region because there is just so much more vibrancy in the region. And you can see this, right? And if you travel to the US and you land in any airport, you feel like this is on the other side of the growth curve. You want to be in our region, when you come into the infrastructure that we have in this region. It seems like this is the future. And so I think there's a lot of hope about what this region can do and broadly what Asia can do. And I think it's likely to be an exciting next 10 years.
I totally agree with you. I've been now on the tech scene in the UAE for 6 years, and we saw, how I would say that the look of people coming from a mature ecosystem is very different on us, now looking at us like rookies 6 years ago, and now being more like really trying to be part of our story. So this is really exciting. And especially as you were saying, if we can build these bridges between using the Middle East and especially Abu Dhabi, as the hub to be able to get bridges to two of the most growing emerging regions in the world, which is on one side Africa and Asia, that's how we can kill it.
Yeah, I think a lot of advantages of the geography, obviously very closely linked, and also just the position as a very open ecosystem, right? One of the things, and when I moved to UAE, the thing that was very interesting was how welcoming the community is, which I don't think people understand from the outside. And unless you spend time here, you also don't understand how vibrant it is. For somebody that just comes in and goes, people think of it as a source of capital, but once you start spending time here, you realize there's actually tremendous amount of talent. And I like to say this about UAE particularly, which is because it's a melting pot of so many different cultures that are coming together. And you look at what happened in the valley, it's all the immigrants that came in, and the hustle of the immigrants created a lot of things. I think that combination of locals and immigrants coming together and innovation gets driven off those things. And I think that opportunity is there for UAE, and you're starting to see a lot more people move in and take advantage of that environment.
So I totally agree. I think we are seeing since one generation in the UAE, people having their own kids, born and raised in the UAE. So that's the case for my family. And I can tell you that definitely my sons are from the UAE. You will not challenge them to tell you that they are from France originally. And I think that it's exactly what you're saying. The point is that you will not be successful in the UAE if you are just traveling back and forth. You need to really be committed, to what we are trying to build together, and to see value for you also, and your company in what we are trying to achieve. Let's talk a little bit more about like this correction you were mentioning in the market. How is it impacting your own portfolio, your investment thesis? How do you manage your investment now?
Yeah, so we looked at our portfolio and looked at what's happened in the last 12 months, right? So, what we observe is companies have actually become stronger. And what I mean by stronger is companies that were burning, hundreds of millions of dollars or, tens of millions of dollars have dramatically reduced, their burn profile. And so we have seen a significant, if you look at it from a FMV or the value of the portfolio perspective, more than 80% of the portfolio has actually both reduced burn significantly and grown, right? It's not like they just stop growing and then reduced and become profitable or something. And then a large proportion has also become profitable. So to me, actually, this is a blessing in disguise. You want a period of, not infinite resources, but limited resources. So people are able to take advantage of that and become healthier. And also what happens in an environment is overall competition reduces because you don't have infinite capital, right? So it leads to more consolidation. The stronger companies will actually emerge, much more victorious in this because the weak competition dies out because capital also converges to fewer players. I think that is the thing that we're seeing across the board. So think companies have become stronger, better profile, many have become profitable. And coming out of this, the ones that have some more capital left will double down on innovation and they come out much, much stronger from things. So we are seeing that as a pattern, and we're very, very happy that we had this break in this capital availability for companies to really fix their fundamentals. And so that's one big thing overall. Better quality companies, stronger. In terms of investment strategy, what changes is, look, when we look at companies, we want to see that companies have actually learned from these experiences, right? So how are you now building your company, right? How do you make sure you have the fundamentals straight, your unit economics right, and a path to profitability? While everybody's saying profitability, you can't turn a switch and become profitable, right? But you should have a plan, you should have a path, and that should be clear to you, and you should be able to communicate that to investors.
So that's coming to my next question. Of course, we are talking a lot about like accessing fundraising, especially in the current time. But what do you think are the biggest challenges, for founders to be able to grow and scale their companies, a part of fundraising?
Yeah, a few things, and it depends on the region. If I speak about this region, for example, I think the biggest challenge here is first depth of talent, because at least if you're a tech company, getting technology talent has not been easy, right? So most of my companies here look at talent from other parts. They either go to Europe or sometimes there are companies that set up in Ukraine or Russia or sometimes in India. So you're having to go outside to look for engineers. And I know Abu Dhabi has some programs to bring engineers to this place, and that's almost imperative for us to do, because if you want to see more tech companies out of the region, we have to find concentration of developers in the region. And I think that's an important initiative to drive. And so talent continues to remain the number one challenge for startups across the world, but more so for this region, right? And hopefully more people come back, because a lot of people go out and become educated in the US or in Europe. And as more people come back, the talent density improves for us. And then, as we have these programs like Golden Visa, et cetera, to attract talent to the country, we will start seeing density of talent go up. So I think those are really important initiatives. The second thing is growth capital. Again, for this region in particular, growth capital has been hard, right? And as I speak to funds, etc., there's a lot of people that come here to fundraise from, whether it's UAE or Saudi Arabia and so on. But the question is really, where is the capital pool beyond Series B and Series C's for this region? Right? And I think that's a problem to solve eventually. That's the opportunity and the gap we saw for us to invest in the region. But it is also a gap that needs to be solved for companies from this region to survive and thrive and become world-beating companies.
And on top of growth capital is also the exit strategy. That's why also we are working a lot with the IPO fund, and ADX in building that potential type of exit. But
yeah, I agree. A lot of good initiatives there. Again, some simultaneous listings or common listings. So I think these are really good things to drive, and stability of regulation, allowing clarity of regulations, etc., will also drive more liquidity. But I think the fundamental thing that will really drive exits is building companies of scale, right? Unless you have companies of scale, and this is a question that was asked of India for many many years, where are the exits? People raise capital for India, but where is the money coming back? But the question to ask is, where are the companies of scale? If companies of scale exist, like Kareem, right, which got an exit, right? Nobody would have thought in this region somebody will come and pay $3 billion, but it happened. It happened because company of scale was built. So we have to ask the question not about exits, but about scale of companies. Once you can have companies of a few $100 million of revenues, you will find that both the IPO markets will be open for such companies, and M&A markets may open up for those companies. So my focus would be really to ask the question, like, how do you build a company which has two, three, $500 million of revenues?
And that's why I think you have this virtual circle, where these companies who went through that path are more open to give back, and to create this networking mindset that we need to be able to grow a tech ecosystem. So I read your bio on your website. So you started with McKinsey, and
right.
You're telling that you were a little bit tired, of making slides, drawing slides, and doing too many air miles. And that brought you 20 years ago to the VC and the capital risk scene.
That's right.
So what are your learnings, for that journey of 2 decades in the sector?
The main learning is it's a very humbling thing to do, right? We all think we are smart, we know how to identify the next big company and so on. But the truth is, our business is 51-49. Like you can only be marginally better than other people, but as long as you can do that over a very long period of time, that becomes an extraordinary track record. So the thing is about just staying with the first principles, understanding that there is a lot of luck involved in both company building and picking, right? And having the humility to know that you cannot assume you're a great investor and assume that everything is going to go well. I think that is the fundamental fact of what we do. When we were Sequoia, we used to say we are only as good as our next investment, right? Which is what got you here won't get you far. You have to every year consistently be able to see and pick winners, and that is just having a point of view which is 51-49, knowing marginally more and learning from your experiences, introspecting and kind of understanding what worked, what doesn't work, and investing. At least my learning is it's much more understanding yourselves and your emotions, because a lot of biases that we have creep into the decision making process, and just being aware of that and having structure to manage that helps you avoid making mistakes. And it's always still going to be a lot of luck.
Perfect. So I would like you to give, please, to the audience 2 advices. One is for anyone who is planning to launch his venture, next year. What should they do? What should they not miss? And also on the other side, of the journey for the investors, if anyone is trying to be a first-time fund manager, what will be your advice?
Yeah, for founders, I would say, look, we all talk about market size being important, and there's TAM and SAM and all of that. But I'd love for people to start looking at profit pools, right? So can you look at your industry and the problem you're solving, and look at what are the profit pools in that industry or that problem that you're solving? Because eventually everything trades on a profit multiple in the public markets. So the question is really, what profit pool are you going behind that, and is it large enough for you to build a big outcome? And especially if you want to be venture backed or growth investor backed, those people are looking for companies that can get to that 1, 5, $10 billion outcomes, because that's when it moves the needle for them. So the question you have to ask is, to be a $1 billion company or a $5 billion company, you probably need to have hundreds of millions of dollars of revenue and a few tens of millions of dollars of profits, right? So how do you get there? Is there enough profit pool in the industry you're going behind? I think that's the number one question. Like, while you have to be authentic to the problem you're solving, you also have to ask the question saying, are there profit pools? If I solve it well, is there enough profit to be made? And profits that you can keep, right? And I think that's one question or one thing for founders to reflect on. And first-time fund managers, look, at least the way I see it, is the difference is really just knowing something incrementally more than the existing fund manager in what today appears like a niche sector, which could be tomorrow's sector, right? Can you pick a few things where you can know a little bit more and build a deep enough network that you will have the opportunity to be ahead of other people on those sectors, and that helps you build a track record over a period of time. If the thesis is the same, global macro about the region, I'm going to invest there. That's not good enough. I think you need to have the incremental insight on a few sectors that allow you to build, that incremental knowledge to play that 51-49 game. 51-49.
Well, thank you for your feedback on that and your commitment, to grow that scene in our part of the world. I don't know if we are allowed to take questions from the audience. Are we? Yes, we are. So I don't know if you have any question. Mike is coming.
You talked about the learnings that the founders are going through with respect to turning towards profitability and cost economics. Do you think that will sustain after 3-4 years once the hubris comes back? I mean, hopefully coming back.
Yeah, look, our memory is short usually. So I do think people will go back to saying growth first. And it's not because of the founders, it's also because investors will say, okay, look, you guys should grow faster because that's what's being valued. But I do think that there are I think some scars will remain, right? The wound will be gone, as they say, but some scars will remain. And as long as those are reminders for us to not lose the plot again and know that you don't go all the way, always plan, assuming that this is not going to be an infinitely, running bull market, right? As long as the founders understand that, then you can play the markets smartly, which is when there's a lot of capital available cheap, take it, but don't spend it. Right? And so the problem is in making that distinction, saying, yes, I'm smart enough to see that this won't last, so I need to take it, and smart enough to know that it will not last and hence not spend it, right? And that's the distinction. If people are able to do that, hopefully people that have gone through some of this, will spend differently. Like this is exactly how, like if you were born before the 90s in China or before the 80s in China when it was not as wealthy, right? Those set of people don't spend as much and save a lot. But if you're born after the 90s in a much more rich nation, then maybe you won't save anything, right? And that's the mindset difference.
Any other question?
Hi, Ravi. Can you elaborate on the few must checklists that you have in mind you look at while selecting the companies?
Yeah, it's always a few things, and we few very simple things. Again, size of profit pools or size of addressable market being one. So if everything goes well, do you have a market large enough that can help you build a large company? That's one thing we are asking. Second is the founder. So the founder and the management team, the quality of that. How is there a founder market fit, if you will? Like why are they doing what they're doing, and are they authentic to the problem they are solving? Because there will always be tough times, and you don't want the founder to be starting to think about, okay, my opportunity cost because I used to be at McKinsey, now I'm doing this. Like if I were in that job, I'd make so much. And you want to know that they're really there to solve that problem that they're talking about. I think those are important. Finally, of course, the business model is, do you have any sustainable advantage that you can hold because it's either IP or technology or patents or whatever else that may help you, or just superior execution. So what is it that's going to help you win in a market? Broadly, these are the three things that we look at, but it's of course a function of that particular company and that particular market.
Thank you.
Yeah, we had another question here. First row.
Thank you very much. You elaborated a lot about the value chain of the companies coming, growing. My question is the following. Do you see, maybe now, maybe in the foreseeable future, these companies are coming to pick up their seed rounds and maybe even IPOing out here, meaning regionally, like considering Middle Eastern money, international money, vs usual America's London? Thank you.
Yeah, it's a great question. Look, I do think, to the point earlier made, saying, look, we need to see companies from the region list in the region, be accepted, because that's the long term thing that you can really bank on, right? You need a very vibrant public markets ecosystem for companies to go public. The issue when you are dependent on a foreign market is you're then dependent on the understanding of those investors of your market, which is not normally that deep, right? You want your local ecosystem where investors from the region who understand the region are able to appreciate why you're building what you're building, right? And if you're a SaaS company, yeah, there are a set of metrics you can do. But if you're a consumer company in this region, and if you're going to list in the US, and US last consumer boom must have happened in the 50s or 60s, they're not going to appreciate why in this region now is a great time to build a consumer business. So I would say in general, it's better if you can build and assume that exits are possible in the same ecosystem. Of course, if you're a global company out of the region, you have access to any and list anywhere else in the world. And that becomes easier to understand. But for domestic companies, you would want to see them succeed in the domestic markets.
Well, thank you so much, Vivek, for being with us today and for
Thank you.
giving your guidance to the audience.
Thank you. Enjoy the chat. Thank you so much.